Good morning, everybody. Welcome to the Locking Your Success Options Trading for Income Weekly Update for September 15th, 2014. Before we get going, I'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the risk in loss can be substantial, so please be aware of all your risks prior to placing any trades. And please note that we do use hypothetical computer-simulated trades in the presentation, and the results are believed to be as accurately represented as possible. However, actual results may vary. If you're watching this on YouTube or some other venue, please come on over to our website, check out our programs, M3 Bearish Butterfly ROCK, M21 Group Coaching, and the Creating Triangle program, as well as our just one-on-one laser strategy sessions. And join our mailing list, get your free reports, 7 secrets to becoming a successful trader, and sign up for this weekly webinar so that you can get all the neat things that we have to offer here. All right, just a note, I will be on the options tribe on Tuesday, and we're going to be talking about the M3 and the M21 and how it relates to a path to becoming a professional trader. So that should be a lot of fun there. So make sure you join us for the options tribe with SMB training on this Tuesday at 5 p.m. Eastern. Okay, let's take a look at the markets. So the market pretty much delivered what we were expecting from last week. We got a general sideways movement with a few fake outs in either direction, and we're slightly down for the week, pretty much in all the indices. So that's pretty much indicative of what we've been experiencing for the last 3 or 4 weeks, which is just confusion in the markets, directional traders. No one's willing to actually take in and settle in on a direction. We have conflicting technicals on the charts. So that's pretty much as to be expected. Basically, what does the market movement from last week mean? It means absolutely nothing. So at this point, we still have no indication of direction. I mean, if I'm a directional trader, what am I thinking? And that's what you need to be thinking. If you were a directional trader and you're looking to buy this market or sell the market, what are you thinking? Here I'm thinking that, short-term traders, they're going to want to go, maybe take a bullish bet off of this support level here that we're at. The Dow, we came down, we touched a 50-day moving average. We're near support levels. I'd probably want it, if I was going to take a shot in one direction or the other, it would probably be to the upside. The SPX, again, we came down to some minor support, short-term. Again, if I'm in the SPX, I'm probably, if I'm going to take a shot at all in one direction or the other, it's going to be to the upside. And the same thing for the NASDAQ. We've just been consolidating sideways. If I was going to take a shot in direction, I don't even know which way I'd go here. It would be normal for the NASDAQ to settle into this support level at down around 4,000 and take off again. But, considering the other indices, I'd probably be more bullish than bearish at this point. That said, news can push this direction either way because we don't have any traders here at this point with any real conviction here. I'd say lack of news, we go up. Unfortunately, we do have news. We got a lot of stuff going on. We got the secession from Scotland and the stuff Obama's got going on with the in the Middle East again. So that may very well just keep the market sideways. But as of right now, we just don't have anything. So until we get some sort of a clear direction either way, we're just looking at more of the same sideways chop, fake outs in both directions. Even a minor penetration of a support level here at this point, it doesn't really mean anything because the traders don't have any conviction yet. You'll know it when they do because we'll get something really big. But as of right now, we're sideways. So wish I had more information for you guys, but it is what it is. We can't. We don't want to make something out of the charts that's not there, and right now there's just nothing there. Longer term, we are bullish. So I would expect that although we may get some sort of a pull down to some sort of a more significant support level, eventually we break to the upside before we get anything. In other words, I don't think we're transitioning into a bearish market. Maybe sideways. I wouldn't say bearish at this point. Okay, moving forward, I do have a few questions, so we'll take a look at that before we actually get into the positions here. Just personal questions for how long I've been trading options and why I got interested in them. And I've been trading options since 2006. So, so for those of you who haven't heard, my story, I grew up as an auto mechanic. I had absolutely no experience in the stock market whatsoever. As far as if you asked me what a stock was or certainly an option, I would have had really no idea. So I didn't get interested in the stock market until 2005, and it was at a success seminar that I went in because I was a life coach at the time, and just kind of got interested in the stock market. And once I got interested in it, I got really interested in it, and I made progression to where I am now. So this can happen for you relatively quickly. Like I said, I went from really knowing nothing in 2005 to 2006 time frame. I don't have the exact date, but it was that time frame, to teaching this within maybe 3 years. And now we're at this level here. We have a lot of people. We got programs out and made a lot of people successful in the market making money. So this can happen very, very quickly for you guys if you take the right path. If you take the path of jumping around from strategy to strategy, looking for the next best thing, then you're not going to get anywhere, essentially. But if you want to settle in and pick a direction and move towards it, it doesn't necessarily have to be this direction. With complex options, it can be done day trading, it can be done swing trading, it can be done all kinds of different ways. But ultimately, picking the direction, sticking with it until you actually master it, and moving forward, this is what's going to get you successful in the market, not just bouncing around from place to place. All right, so next question we have is, what keeps me going? Yeah, determination, right? So there is a period of time in your trading career where yeah, you just think where you just think that things are not going well because you're making this effort, making this effort, and maybe you're getting break-even results, maybe not enough profits, maybe you're even negative, right, for extended periods of time. But ultimately you have to have faith. You have to have faith that you are, you keep a clear focus in mind on where you want to go. You have faith that it's going to happen, and again, you continually work on some sort of a trading system or trading strategy until you get it. Chances are you're not going to take somebody else's strategy verbatim or rule set for rule set or whatever and make that work for you. You're going to have to adapt it to yourself. So it's just a matter of taking that and working with it. There's lots of ways to make money in the market, so you just work with it. And as far as my thoughts on keeping trading journals, yes, trading journals are essential. Trading and psychology journals are extremely important. And some people, they kind of get crazy with their journals where they start micro-focusing on stuff. Because the question is, what are my thoughts on keeping journals and what consists of a good trade journaling, in my opinion. And getting down and micromanaging your trade journal, I don't think is particularly useful. The fact that you put a vertical spread in today and which strikes they specifically were and the exact cost and all this other stuff that doesn't matter isn't the big deal, right? You get yourself caught up in these little details. I mean, you want to have a general idea of why you made this strategy. Was it with, I made this for this purpose. Was that within your rule set? If it wasn't within your rule set, why wasn't it within your rule set? What were you thinking at the time? Were you nervous? Were you, optimistic? Were you just, panicking because you thought you were going to lose? That type of stuff is much more important than the exact price of an option and stuff, or micromanaging your journal. So, keep your journal in generalities. In general, I was feeling this way. This was going on in my life. This is what's going on in the trade. This is what's going on in the market. This is why I made the adjustment. And ultimately, too, when you're journaling, people sometimes, if they lose a trade, they treat themselves as if they did something wrong, when that's not necessarily the case, because you can do everything right and have a trade that comes out negative, in which case you do not beat yourself up for that. You actually reward yourself for doing something right, even though the trade lost. If you beat yourself up for doing something right, then you're training yourself to do the wrong thing, which is in the long term is going to hurt you. vice versa, you can flip it around and say, yeah, just because I won a trade didn't mean I traded properly, right? If we go back and we didn't journal it, we say, hey, I won the trade, I did something right, even though you did the wrong thing. You're training yourself to do something wrong, which in the long term is going to hurt you. Whereas if you flip that around and realize that you did that the wrong way, you can correct it later. So that's the kind of things that we should be doing. All right, so that's kind of my thought on that. All right, so we do have some more market type of questions. The open of the year in Russell, 1160.50, seems to be a magnet for the index. Do you give any weight to the open of the year when you're looking at the technical analysis for the Russell? Where it opens for the year is, where you are in relation to the open of the year, I guess, is important, but where it opens the year in particular, not so much. Yeah, we opened the year where? Down in here. Yeah, a little bit higher than 1160, or right around 1160. So that's fine. Does it have any relevance in technical analysis? As far as I'm concerned, not really. I just know that 1160 is the middle of this range that we're in. And for us to come down to 1160 wouldn't be, for us to come down to the bottom of this range here at 1080 wouldn't necessarily be too surprising. Because, like I said, we've been in this sideways range. What I think more likely is going to happen is we kind of hold the top end of this range. We may go a little bit below where we are now, but I think we may hold the top end of this range going forward and then go higher. But I don't think the 1160 in itself has a whole lot of significance other than it's kind of the center of the range here. Usually when a stock's going to break out, it's going to come down, settle somewhere mid in the pattern, and then break higher. So midway in the pattern, which is where we are now. Do I have an opinion on an October when I transition? Okay, if I had an October M3, I didn't look at what the entry is for a rock trade for October. But if I had an October M3, when would I be interested in doing a rock trade? Well, see, right now, I don't know that there would be a time this cycle, and the reason I say that, unless we got an explosive up move. So, before we were looking at maybe transitioning into this 1200 area, but that's coming off a level of 1100. Now that we're coming off of 1160, the market would have to have some sort of a straight up movement, because see, the October cycle ends right around here, right? You'd have to have some sort of a really, really aggressive straight up movement into probably 100 plus points, 1260 or so. The likelihood of that happening is very, very small here. So it's not likely that I would do that. Of course, if I'm on a rock trade, it gives me guidelines on when to transition over to. If I start a rock trade in an M3, it gives me guidelines on when to transition over into an M3. If I was trading a regular M3 and I'm looking for opportunity to make an aggressive position so I can make more money, it's just not there right now. There's nothing in the charts. So, that may be, that said, that's just looking at the individual Russell index. If I look at the SPX, the Dow, and the NASDAQ, and I see drastic overextensions in those, and I'm only up to 1210 in the Russell, then I'd probably take on a rock trade, right? So everything's in context. But right now, even those indices don't look like they're going to be overextended when Russell hits 1210. So there's probably not the opportunity for that this cycle. It's just a matter of being patient. You will have throughout the year. You're going to have there's plenty of times or plenty of opportunity to make big money months. This just is not one of them. So all right. So let's see here, and I think that's it. So that's what we have. So that's a good set of questions, guys. Thank you. And especially on a month when we don't have a whole lot going on. So let's take a look at our positions. If you remember, we're here in expiration week. We still have 3 of our 4 September trades open. The Bearish Butterfly for September was closed at, I think, a little over 11% profit, but that was like 2 weeks ago. I've been looking for opportunities to get out of the September M3 at 5% profit, and with a rock trade, if you remember, I was looking to basically get the 10,000 unless we got kicked back into a cat position, in which case I'd be willing to go at the 5,000 level and just get out. So let's just look at what's going on with the M3 here. So our September M3 as of Monday looked like this. We had this position here, and here's our analyzed graph. I'm often asked, how long are you willing to stay outside the tent? Sometimes it's right up until a couple of days before expiration. It all depends on how I can manage this T+0 line in the Greeks. As of right now, as of Monday, we're at minus 51 delta, which outside the tent is a touch high, but it's fine. Our Vega's minus 102, that's good. Theta's 129. This position just looks really nice. Of course, we did get some up movement during the week early, and that did create a situation where I wanted to add some verticals in here to stabilize the T+0 line. So Tuesday, that happened. And if we go, let's see, I think it was Tuesday. Let's see what days we did stuff here. Oh, I'm sorry, that was on Monday. On Monday, let me back off. So on Monday, I did make an adjustment. If we go back to Monday to 1500, so sorry I misspoke there. I don't have my notes in front of me, but okay. So Monday, this is where we were as of last week. So you can see our delta's minus. So coming in here, we didn't really have an up move, but our delta increases with the T+0 line morphs with time passage, right? So that being the case, I'm minus 116 delta. I want to get this down to around minus 50. So what I did is I did some verticals in here, and I just had the day wrong. So on the 8th, we did a total of 6, 1150, 1160 put verticals, and that straightened our delta out to about minus 51, which is about where I like it outside the tent. And it straightened out it brought our Vega up quite a bit too. So that was fine, and then there were no further adjustments until the 11th. And you can see that all I did is I did more of those verticals. So I did more 1150, 1160 verticals. Even though the market backed off and we're inside the tent now, the market came down and I adjusted up because as we get into expiration, the delta increases here naturally. So I went ahead and did that. This is what the position looked like going into the weekend, and this is what the trade looked like going into the weekend. Very healthy looking trade. We have the delta's good. We have some downside room here. And if it really blasts off to the upside, it's not going to be the end of the world. We'll draw down a little bit. That said, I was looking to get out at 2,500. I was at 2605 here on the screen. Now, I did get a question, why didn't I exit this day when this is what I was looking for? The reality is I'm in these trades, very similar trades with similar options on live pretty much all the time. So that being the case, I took a look at the options pricing, and I did not think that I could actually get executed this day for this kind of money. So I stayed in over the weekend because I want to make this look as we want these as realistic as possible. I just didn't think it was going to happen. So I'm still in this. Essentially, if we have a flat day today, or if the market's down a little bit, then this will be closed today, because I'm sure the pricing will come in today. If the market takes off to the upside, then we'll probably end up struggling with it into expiration. Okay, when I say, that's a question, when I say that I expire a trade, do I actually let it expire or I close it on the last day? If I expire the trade, if I say I expire the trade, I expire the trade. If I say I close it, then I close it. But yeah, I will let these expire. And for those of you who do let these expire, you have to be aware that there can be a fairly large difference between the value of the Russell on the close of Thursday and the actual RLS value, because the opening value is determined by the combination of where the stocks open up on Friday morning, which can be outside the range of where you close and where you open. So you have to be aware of that. You have to make sure you have enough room. If I do have enough room, then I will take that risk. If I don't have enough room, or if I'm not in a safe position, I'll close it towards the end of the day on expiration. So I do quite often let these expire. Maybe not if the position's tight necessarily, but if the position's really wide. I mean, V condors I let expire all the time because we're far enough away from everything where there's really just not an issue there. This may go one way or the other. Sometimes I'll I'll make it a little safer. I'll take off some risk, and I'll let it expire. But I often do let it expire. So let's just go over to the ROCK trade quickly, and then I'll answer a few more questions after that. So let's go to Monday at Monday morning on the ROCK trade. Now the ROCK trade, we do some intraday adjustments. So I'm just going to go a little bit earlier in the day on Monday here. This is what we look like here. We're mostly scaled into a ROCK position as of Monday. Let me just go another half an hour early. So how scaled in are we? All right, so we have 7 1200 butterflies, we have 10 1180s, we have 10 1140s. We are 1330. We only allow a very small amount of positive delta here in a ROCK trade when we're fully entered. That's because we're so susceptible to volatility, and we're so susceptible to a harsh down move because we're kind of in a tight position. So that being the case, we start scaling out of these at around positive 100 delta. And I don't jump on it in the middle of the day when it's 100 delta, but you know, by this point here during the day, we were over 100 for a fairly large amount of time, and now we're pushing 150. I think by the next half an hour, we're pushing much more than 150. So we start backing out of these 1200s. So that's what I did. If we come to 1400, oh, it did. Okay, you see we pulled out of a couple of these 1200 butterflies, and then I believe at the end of the day, yeah, so there's that, and that was it. So we pulled out of 2 1200 butterflies. Following day, we sold 2 more of those 1200 butterflies because the market continued to come down. So let's take a look at what we look like at the end of Friday. I'm sorry, the end of Tuesday. We actually sold all the way down to having 2 of these butterflies. So that means we sold out of 3. I sold out of one early and one a little bit later. Let's see, this is on the 9th. So we sold out of 2 early in the day. So did another one a little bit later in the day. So a total of 3 we sold out of there. That brought us down to positive 84 delta coming into the close, which is acceptable. Gives us a position that looks like this. And I believe we had to buy those back. So let me just go into my T-log here. I apologize for being a little disorganized this morning. It's a lot going on this weekend. Yeah, so Thursday we bought 2 of those back. So if we go to Thursday, the market shot back up. We had that big up day on Thursday. Forced us to buy a few of these 1200s back. So now that we're in 4 of those 1200s, our position looks like this. Again, we're just kind of scaling back into these. And then, of course, on Friday, the market came down, and it kicked me positive delta again. And I had to sell out of 3 of these 1200 butterflies midday. This is what we ended up doing for the end of the day. We're back to, on the top end here, we're back to having 1 butterfly at 1200. We have 10 butterflies at 1180. We have 10 butterflies at 1140. Our position is up 62.33. This is what we look like coming into expiration week. So the thing with this is this will very, very quickly be worth money if the market's stagnant, but it's going to draw down a lot if you get a big move. So, you know, basically I'm looking to get out of this as well as I can. To the downside here, if I shift into cat position, then I'm only going to take 5% anyway, so the position will just be closed essentially if I get too much of a downside move. To the upside, I'll probably hedge this off, but we're going to use different tactics in buying butterflies because we really don't have any short value here on the 1200s, and this is going to get less and less so as the market goes, as the market gets closer to expiration. So we're going to be doing some different types of moves rather than buying butterflies, and I'll show those next week if they actually happen to occur. But there's other ways to hedge this off. So I'm hedging off to the upside. I am closing the trade to the downside at this point. So this should be a positive month for this. You never know, but it should be. So that looks good. All right, so a question here for the September M3. If I had a 30-point gap down, we're not in a huge danger of losing money. We would just break even. Close to expiration, would I structure the trade to accommodate a 30-point move either way, especially over the weekend? I would be structured so that a 30-point move wouldn't put me under maximum loss. I wouldn't necessarily be structured so it would make me break even. I'm not concerned about losing a trade. I mean, that's part of the game. Sometimes that happens. It stinks when it happens in expiration week if you're up money because, well, I mean, you traded all month and you lost a trade. But the reality is a lot of times holding into expiration week, you're going to make a lot more money than you're going to lose that one time it gaps against you. So, but yeah, I would definitely want to see probably 30 points and not exceed a maximum loss level. And if I did, I'd probably correct for that. But as far as being break-even, like I said, that's not my biggest concern is not exceeding my maximum loss numbers. I know over time I'm going to make enough money to make it back if I happen to take a loss. But yeah, definitely a 30-point gap is a reasonable thing. You don't get much. It would be very rare for you to get more than that. All right, and then the next question is, are there any differences between how I actually trade and what I show in the web sessions? The web sessions are, as much as possible, rules by guidelines within the programs. I'm a little more free with the way I trade. The trades that I do live all follow these concepts. I do M3 trades. I do Bearish Butterfly trades. I do ROCK trades. They're all within the concepts of what we do here. I might do something a little bit differently as far as, like if we get into it, M3, basic M3 basically is what we go over here. If you get into like advanced M3 stuff that we do in one-on-one coaching and group coaching, then I do some moves that look maybe significantly different than what's here. But they all follow the same concept of controlling the T+0 line. It's just the manner in which I do it sometimes can be a little different. But yeah, but you're going to see very close to what you have here. Like I'm not, if I showed you or most people the exact same way that I trade offline or live, you probably wouldn't understand the moves I'm making. Here I try to keep things as much as possible in butterfly structures, in vertical spread structures, somewhat balanced so that people can follow it. Once you start kind of throwing options all over the place to fix your T+0 line, which is actually more effective, but it's less understandable for most people, then that's where it differs. But in general, the concepts are all the same. Yes. How much room do I need in the rut for safe expiration? What I would have you do is go back through history, check the RLS value against the closing value of the Russell on the Thursday of expiration, and just go back. I mean, you don't have to go back forever, but go back several years. You'll see how much room or how much things gap in certain situations, and you'll get an idea of how much room to leave. I can't give you a solid number. It's a little bit dependent on the situation, but definitely go ahead and do that. It's going to give you a lot of insight as to how much room you actually need. All right, so can I mention what kind of adjustment I would make to hedge the upside close to expiration? Assuming you're talking about an M3? Okay, so let me make sure we're done with the ROCK trade. Yeah, we're done with the ROCK trade. We talked about that. So if we come to the M3 on here, then as you come into expiration, as far as the upside goes, there's a lot of different things you can do here depending on where you are. I mean, here in the graph, if this was expiration day, I wouldn't expire this because I can gap into here fairly easily and lose this. So, I mean, if I didn't want to trade out of the whole thing, I could sell off my call and I could, just bring these back, just close out. Essentially, you're just kind of going into like a vertical spread, so -5. +5 down here. I don't know what that's going to bring me for delta. Right, I could do this. Right, this gives me, if this was expiration day, delta doesn't matter because all I care about is where this is going to open tomorrow. Here, if the market happens to not move and close at the value, I have the potential of making another $3,000. Of course, it'd be less than that closer to expiration, but this is kind of the concept. If we gap up into here, I basically don't lose anything, or if I did lose something, it would be a small amount. If I gap down into here, I have a small gain, and I'd have to gap all the way down to 1120 to even have a problem here. So that being the case, I'd be perfectly comfortable expiring a position like this. It wouldn't be an issue for me. If I was really concerned about something, I could put a put on for a back month to help offset that, or maybe 1 week ahead of time. In other words, I could buy puts at this strike level on the next weekly. That's going to basically hedge off any downside risk I have at all. And I could probably buy these as far from expiration a week, probably for a dime, right? I could just balance the position off, and that would be a small cost for me to protect myself for that. I probably actually maybe even buy them for 5 cents that far down a week out. So, things like that you can certainly do to help offset your risk, but that's what I'd probably do here. All right, which one is the most popular of my systems? M3. M3 is going to be the base of the system, the base of bringing yourself to being a really, really good trader. It's the most flexible as to approach. It's dynamic as far as learning, and it really is the key to being a successful trader. Learning a trade through the M3 would be the best route, and I think that's probably the most popular of the systems. Okay, coming forward, let's. So that's not all the September positions. We also have a September V Condor, which we've done nothing. Let's take a look at a September V Condor. Right, no adjustments here. This is not the V Condor. Why are we here? Oh, okay, it's because I have this trade in here, which should not be there. So this essentially has had no adjustments. This is what our position looks like. This is our T-log. We are just waiting for this to expire, and it's still not right. All right, so this is what we. All right, well, this is not correct. So I'm not going to be able to show you the September V Condor. What I can do is, let me just clear all trades. I'm not sure what's going on here, guys, but there were no adjustments from last time. Let's see if we can get an accurate picture here. There we go. That's better. All right, so this is what the V Condor looks like as of the end of the week. No concern whatsoever of worrying about expiring this. I'd even be comfortable taking the straddle out and just getting the whatever money I can get out of that too. If you wanted to make a little bit more here, you could pick up 80 cents here. Probably by the time you execute it, maybe another 40 cents here, and just kind of make a little bit more. But 3,000 is a good little average for this type of a trade, and that's looking good. So I'm just going to let that expire. Who knows? I might get lucky and get some sort of a settlement up in here and actually make a little bit more. But that's not likely. More than likely, we're going to just settle it here for this price level of 32.80. So that's likely the end of that. All right. So yeah, thanks, Vincent, for trying to help me out here. Okay. So do I suggest getting comfortable with the M3 before going to the other strategies? Yeah, I mean, that would be the most effective long-term strategy there, is doing that with the M3. Okay. And that's it. So that's it for September. Let's just quickly shoot over to October. There's really nothing happened in October. So let me just kind of show you where the October trades sit. We got our October V Condor, since we're in V Condor world. Really no need for adjustments here. This is doing really, really well. Very, very likely we'll pull at least a reasonable profit out of this, probably in the 3,000 range. It's a little early to tell, but I would. That's most likely what's going to happen. The October Bearish Butterfly, if I can find the strikes for it, also has had no adjustments. We're just sitting here in the 1160 position. If you remember, we rolled up from the 1140 to the 1160 back a couple weeks ago. Here's what we look like. So this is looking quite nice so far. Everything's looking good there. And then as far as the M3 goes, we're here up about $1,600, and I don't believe there were any adjustments on this either. Let me just check to make sure. Yeah, so we basically put this on. We haven't done anything with it. We are in this position here. We start pulling outside the tent, or we sit here and the delta gets high, we'll be putting more verticals in this. But other than that, this looks very, very nice. No reason to do anything. So that, and that's pretty much all we have for trades. I think I had a question somewhere I missed. Let me just look through this quickly. If there's any other questions, just bring them on in. Well, I don't see it now, but somebody asked me, oh yeah, do I anticipate entering our October rock trade this week? I don't know, how close to expiration are we? Yeah, 35, yeah, so we're going to be entering that on 30 days is Wednesday. So we'll put that on Wednesday. I'm not sure if we're going to be in rock position or M3 position. As of right now, I would guess we'd be in rock position, which, again, like last month, I do not necessarily like that, but I'm pretty sure that's what the market's going to tell us, and that's what we'll do, because that follows the system within the video guidelines. So, and this might be a difference where I may, right? So you asked me if I do it the exact same way. This might be a difference where I differ my live trades with maybe a real rock trade, because I probably wouldn't do a rock position in rock trade this month. Although it may turn out fine, the reality is in the charts I'm looking at is I don't see, when I do a rock trade, I like to have some sort of a idea where the market's going, and right now we really don't. And if it breaks out, it could be a very, very big move, and that would probably create a loss for that trade if it happened a little bit after entry. If some time goes by, usually it's fine. But if it happened immediately after entry, it's a little susceptible to that, so I'd rather play it safe and pick my battles of being more aggressive when we have some sort of a read on the market, which we simply don't have right now. But that being the case, we're going to go ahead and do it per guidelines. And you'll see the results will be really good anyway. Even this month here, I wasn't too comfortable entering a rock trade this month, but it's turned out to be fine. And the results aren't in yet completely, but very likely we'll be okay with that. I'm just reading for other questions here. Okay, yeah, so somebody did email me a question, and that was basically and this is kind of outside. One of the things we do in like an M21 type of trade, for example, a lot of times if we're in a bearish butterfly and we have to roll the thing back, the guidelines basically say to roll back at the money and then continue trading it as a bearish butterfly. But one of the more advanced things the more advanced people do is they'll roll back into an M3, because especially in an uptrending market, because the market will come down, you'll get to the adjustment point in your bearish butterfly, you'll be up money. You just roll it back and you go into an M3, because a lot of times the market will come down and it will blast off to the upside. And if you do that, you pretty much will hold your profits, sometimes make more money. But you're just going for a trade that's a little bit more resilient to price movement when the market comes down. So the question is would I ever switch back into a bearish butterfly? And the answer is that in other words, would I go from a bearish butterfly to an M3, have the market take off, and then go back into a bearish butterfly? In order for that to happen, I would have to have a few conditions met. It would be very rare for me to actually do that in the same month. Essentially, if you look at the bearish butterfly guidelines, once we're 21 days to expiration, our objective is get our 10% and leave. Why is it that way? It's that way because the trade becomes more difficult to manage, which if you're more advanced, fine, and you're comfortable in that situation, fine, that's not a problem. But in general, beginner people, I don't like them to take on that kind of risk coming into expiration. I'd rather have them in something more like an M3. That's a lot safer against price movement. That being the case, in order for me to do that, I'd have to have a situation where I put on a bearish butterfly trade, like 2 days later, I went into an M3 and then the market shot up like crazy to getting near some sort of a resistance point, and I'd have to have maybe 30, probably 35 days left before expiration if I would even consider going into a bearish butterfly. If I had like 30 days to expiration, I would rather go into a ROCK trade, or if I get an up move where I outrun my M3, I'd probably just keep it as an M3 and fight it till I thought I was near a resistance area, and then go out to the next month and go into the following month bearish butterfly, where I'm a little bit further from expiration and I have a little bit more room for a continued up move before I get myself into trouble. So it would go something like bearish butterfly, October bearish butterfly, October M3, November bearish butterfly, or October ROCK trade. Usually a ROCK trade, I'm comfortable getting in up to like 15 days to expiration. Well, sometimes even closer, but that's usually how that's going to go in the swapping back and forth. Because I know 99% of the time, if I go from a bearish butterfly to an M3, by the time I get switched back into a bearish, I'd be comfortable that the market's high enough to be back into a bearish butterfly again. By the time that happened, I'd probably be too close to expiration for October, and I'd want to go to November. So that's what I'm thinking. So in my own trading, would I enter an M3 instead? My own trading is all in M3s right now. I'm heavy into M3 stuff. I don't have a good idea where the market's going, and at this point, so everything starts as an M3. This is where the M21 comes in. You don't know where the market's going. You start out as an M3. If the market goes somewhere where you now have a good idea where the market's going, you convert into something else that's more aggressive. But as far as a starting position, M3 is the preferred starting position for this month for all my live stuff. For November M3, it may be the same strikes as October M3. Is that acceptable? Yeah, at an M3, I'm okay with the same strikes. That's not a problem. In a V Condor, I'm not, because I will V Condors can lose at the same time, even though in their different months. And M3, even if you happen to, just because they're in the same strikes, the difference in the time frame will makes a huge difference in the way the trade reacts, and therefore I would not be concerned whatsoever being in the same strikes in an M3 from month to month. And this is okay. This will probably be the last question because we're running really late on time here. I made a comment in the past to trading the M3 using implied volatility. If I'm not wrong, I do not understand that question, Adrian. Comment in the past is to trading using the M3 using IV. I may have, and I'm just gonna. I'll put an answer on this that I think might relate to what you're talking about. In general, implied volatility, when it's high, the trade reacts like it's further away from expiration than it really is. And when implied volatility is low, it acts like it's closer to expiration than it is. So in extreme low volatility, a lot of times you're more beneficial starting further from expiration and not running the trade into expiration, maintaining some positive delta. In very low implied volatility, and in higher volatility, you don't want to start too far from expiration because the amount of price movement you're going to get through the duration of the trade, you're in the trade a long time for nothing, and things like that. hopefully, okay, great, that was it. All right, super. So that was all the questions we have for today, and I thank everybody for joining me. Another good long session here. So have a great week trading, everybody, and we'll talk to you next week.